In a very exciting video, we analyze Bitcoin's development process in a way that everybody can understand and enjoy. Then we will analyze its chart and reveal a surprising pattern that may change the game. Stay with me. Hello everyone, welcome to my channel. In this channel we will learn about cryptocurrency, blockchain, technology, as well as money, finance, economy, and investment. In this video we are going to analyze Bitcoin. The peer-to-peer electronic cash, which was introduced in its white paper as a solution for the double spending problem, today has another use case, which is a store of value. Gaining more and more adoption day by day, the king of the coins is moving forward really fast. And in this video we are going to analyze it to have a better understanding of our investment and find the correct direction for trading. So let us begin with the development activity, because although we may sometimes forget it as a result of the distraction of the hype for financial gains, Bitcoin is a software, and we should analyze it both like an investment asset and a software. Otherwise, we may lose some money not paying attention to one critical area. So without wasting time, let us begin the analysis. This part of the analysis consists of 4 sections: overview, community, programming, and security or risk management. Then we will have our conclusion. By looking into the source code page, we see 4 repositories. 2 of them have been pinned and they have good short descriptions. BIPs or BIPs, which stands for Bitcoin Improvement Proposals, mainly written in Python, and Bitcoin Core, mainly written in C++ programming language. To analyze the development process, we are going to look into the core. And the first thing we are going to analyze is community friendliness. Well, community friendliness has some metrics, and the first thing to consider is the explanation. Bitcoin Core has a short description and a well-structured README file that explains and covers lots of areas including license, development, testing, and translation. And there are links in it for even more information. When analyzing healthy and constructive community behavior, unfortunately it doesn't have a code of conduct, which is a document that establishes expectations for behavior for the project's participants. Also, unfortunately again, the repository admins do not accept content reports. If they were accepting, collaborators and contributors would be presented with the option to report disruptive content to repository admins for review and moderation. Let's analyze the contribution metrics. The repository has a well-structured, explanatory, and comprehensive contributing guideline. And if you are serious about contributing, there is a lot more help for you. In fact, it can be an example for a lot of other projects. Talking about contribution and example, the repository has both pull request template and issue template, meaning they have customized and standardized the information they like contributors to include when opening issue and pull requests in the repository. Okay, now is an appropriate time to analyze issues a little more. By looking into the issue list, we can see more than 600 open issues, which are approximately 9% of all issues. A high number for the total issues is good because it can be the implication of a more active community and development team. But it is better to see the percentage of open issues or the open issue ratio is low, because it can demonstrate fast response by developers. We will talk about response time metrics more in future analysis. To understand these numbers better, we can compare them to Ethereum. The total number is close, and the open issue ratio is lower for Ethereum. And the two facts we know are Ethereum was developed years later and it has more use case, so it is performing better in this case. But we can also compare both of them with popular open source software like GIMP, where open issues are 42% of all issues, although this software is highly active. I can see a smile on the face of crypto enthusiasts now. But one unpleasant fact is that not all those open issues are new, and lots of them have been created years ago, and some have not been updated for years. Anyway, with all the activity in the repository, I would say that 9% is more than acceptable, especially when compared to other open source projects. Maybe we are acting too much perfectionist here. Looking into conversations, while the development team has somehow responded to all the closed issues, whether with comments or commits, there are some closed issues without any comments. It can happen when the issue is resolved very fast, or conversation happening in a different place. But lots of these are inappropriate issues that are not respecting the issue template or are irrelevant. So it is expected to see a higher ratio in projects without issue template or code of conduct. Of course, GitHub has some other useful methods that can reduce this type of issue and their ratio. Anyway, it is interesting to see the development team is paying attention to details like removing labels from useless or inappropriate issues. On the opposite side of issues with no comment, some issues have so many comments that makes them similar to a chat room. Overall, the development activity regarding contribution is very good. Time to analyze project management transparency. Fortunately, the development team is using all the project management features available, and everything is transparent. Extensive and proper use of 50 labels makes it easy to navigate around issues and pull requests to understand it better or contribute. And by looking into this table, we can understand they are paying more attention to labels recently. Also 4 open and 43 closed milestones, and 8 closed and 7 open projects tell us a lot about the history of the project and the path they are going. Bitcoin passes the project management transparency test easily. Now let's see what we can do with the repository and what we can't do. The repository uses the MIT license, which gives a lot of freedom to those who want to fork it. And more than 29,000 users have forked it. Also more than 56,000 users have shown their love for this project by giving it a star. And approximately 3,800 users are watching it closely. Okay, it's time to have our conclusion for community metrics. Without any doubt, this is a community-friendly project, and with a little improvement, it can achieve perfection. Now take a deep breath because it's time for the exciting programming section. Time to analyze the programming aspects. As you can see, Bitcoin Core is mainly written in C++, followed by Python and C programming languages. If you can code in any of these languages, you can join more than 800 contributors of the repository. You may contribute without even programming knowledge, but knowing these languages helps you contribute even more and join the top contributors list. Speaking of contributors, it is good to see the project has so many contributors, but we should assess the risk for single point of failure and concentrated development. In fact, I have designed 12 metrics for this purpose, but to make it short, I will use 4 of them here. By looking into contributions, we can see the SPOFT, or the percentage of total commits created by the top contributor, is 5.81%, which is low and desirable. But SPOFG, or the percentage of total changes by top contributor, is more than 48%, which is extremely high and not desirable at all. We like to see development is distributed more evenly among all contributors. And if you ask why, just imagine that the top contributor has left the project, or is not able to contribute anymore. The speed of development will be reduced to half in this case. But the 2 other metrics, ROCD50T, or the number of contributors that together create 50% or more of commits, is more than 10, which is high and desirable. But ROCD50G, or the number of contributors that together create 50% or more of changes, is 2, which is very low and undesirable. It is definitely a negative point when analyzing the big picture. But looking into the last 6 months' activity, we see that development is a lot more balanced and risks are heavily reduced. And also, activity criteria in the previous month, which is trivial compared to the whole life of the project, shows so much activity that in some of the worst scenarios, the repository will not face a serious problem and will only experience a reduction in development speed. There are more than 30,000 commits in this repository, and the number is constantly increasing. We can see the overall consistency regarding creating commits is good. Although it looks like that the development is not constant regarding changes, it has an acceptable level of development going on all the time, and we can see a spike showing higher development activity usually every 3 to 6 months. So we can say it has its own pattern of development. Also, most of the commits have a good description, and by investigating the codes deeper, we can see there are all sorts of big, medium, small, and some trivial changes, and all of them are real codes. In fact, I was not able to find any fake development, because they don't need to fake it. One important aspect of development is pull requests. Open pull requests are usually new requests with no finalized decision about them. Rejected or closed pull requests are those that are not accepted to be included in the source because of different reasons, such as being useless, irrelevant, buggy or problematic, not respecting the pull request template, or just being a duplicate of another already accepted one. And merged pull requests are those that have been accepted to be included in the source code. The final decision to include a pull request in the source code or not sometimes needs a lot of negotiation, and sometimes is made without any comments. It may sometimes take a long time to decide, but we don't like any pull request to be forgotten. By calculating the metrics for pull requests, we can see closed pull request ratio is acceptable, but it could probably be even better if there were not too much hype around the project and more contributors were paying more attention to the pull request template and project's management guides and contributing guidelines in the repository. But the open pull request ratio being as low as 2.5%, while open pull request count is more than 400 and high, is the indication of an active development team, and a matured project with an active community at the same time. Bitcoin's releases have a short description and a detailed release note. Currently we can find 89 of them in the repository, and probably one will be added almost every 6 to 7 months. But looking into the tags, we can see most of them unfortunately don't have any description. A little more description will be appreciated. Creating 256 tags during 12 years means one tag almost every 17 days on average. Let me explain this metric a little more. The ATP, which I use as an abbreviation for average tagging period, can help us understand how the development team takes the development history seriously. If the ATP is 2 months or more, I assume the development team is irresponsible toward history, or the development is slow. I will call it acceptable if the ATP is between 4 weeks and 2 months. And I will call it desirable if the ATP is between 2 to 4 weeks. If the ATP is between 1 to 2 weeks, there are two possibilities. Either the development team is over-tagging, or they are somehow obsessed with the history of changes, or there is an outstanding development speed. And if the ATP is 1 week or less, again we have two possibilities. Either they are shallow tagging, which is a term I use to talk about non-thoughtful or non-meaningful tagging, or we are observing a super fast development speed. But to analyze the development speed in a quantitative manner, I have designed 12 more metrics, and I will talk about 3 of them here to make it short. The velocity T is the average commits per day during a period longer than 90 days. The velocity G is the average changes per day during a period longer than 90 days. The velocity 1K is the time needed to change 1000 lines of codes based on recent activity during a period longer than 90 days. Imagine there is a critical 0-day bug reported to the development team. With these metrics, we are trying to guess how long does it take to resolve that bug. But some development teams may try to fake it and produce some useless codes and commits. I have designed some metrics to discover those fake developments. Some of them are too complicated, but here we will talk about one of them which is easier to calculate and understand. Dev depth, which stands for development depth, is a metric that allows us to understand how deep a commit is on average, meaning how many lines of code have been changed in a single commit. But to calculate that, we only analyze long-lasting changes in commits. In fact, I expect this number to be very small for fake development if there are not too many nonsense leftover changes, which can be detected of course. Small for nascent projects, and bigger for more stable projects. But if it becomes too big, it may produce problems and conflicts when merging commits, and make it difficult to review, so slowing down the development. I should remind you that this metric can misguide us if not used in combination with other metrics properly. Anyway, as we go on and analyze more projects, we will have a better understanding of desirable and appropriate numbers for cryptocurrency projects. Okay, to calculate these metrics, we analyze 2 of the last stable releases which have 109 days interval. During this time, there were 73 commits to change 126 files with more than 22,000 additions and approximately 9,000 deletions. Of course, thousands of these changes are trivial or not real codes. For example, 2,705 lines have been changed for release notes, which counts for more than 8% of changes. That's a big number because the project has a good, long release note. But even after deleting that, we have a dev depth equal to 400, which is pretty good. Now let's have a look at the calculated metrics for these 109 days of development. As you can see, almost everything looks good, while those 100 days were not the most active period of the repository. And if we analyze the last 243 days, which are not the most active time frame again, we will see some amazing results. Okay, let us have a conclusion for the programming section. Average tagging period is desirable. Concentrated development metrics don't look good, but we know that it's because of a supercoder presence. I wish we had more of his type in the project. More than 100 pull requests per month is awesome. The open pull request ratio is very good. The closed pull request ratio can be improved. Dev depth metrics are very good. And while the velocity metrics are acceptable during one of the lowest activity periods, they are wonderful when analyzing longer time frames. I feel better about investing in Bitcoin now. What do you think about it? Write about it in the comment section. Now get ready because we are going to look into the dangers and check our defenses. Thinking about risk management and security, the first thing to analyze is security policy. And fortunately, Bitcoin has a security policy which is very concise, clear, and accessible. It's good to see security report has been mentioned in the issue template too. Another aspect of risk management is dependencies, which are packages and projects that the repository depends on. Dependencies are being actively updated. Also, I prefer to see another approach than what is being used currently for updating. It's good to see that the development team is paying attention to reduce the number of used dependencies while updating them. Because I've seen projects that simply ignore dependency updates and don't do anything to reduce the dependencies. Also, using various types of automated tests on the codes, on several platforms, on multiple architectures, and on all major operating systems creates peace of mind. There is even a high emphasis on testing and reviewing the codes in the pull request template and the contributing guideline. With an easily accessible security policy, dependency update or reduction where possible, multiple types of automated tests, and a very active development process, Bitcoin passes this stage safe and sound. Now we know a lot about the development process of Bitcoin. We know that a lot of attention is being paid to the community, and the community is helping Bitcoin a lot. We also understood that programming is going on fast and healthy, even in the lowest activity period. And at last, we understood why Bitcoin has become famous for its security. Now I feel a lot better about investing in Bitcoin, and you can guess what that means. What do you think? Tell me about your own research if you have done it, or just talk about your feeling about Bitcoin before and after this analysis. Write it in the comment section below this video. Also, if you don't understand anything, do not hesitate to ask. I will try to answer all comments as much as I can. And before we go to the entertaining part of technical analysis, please make sure to subscribe to the channel, hit the notification bell, and hit all, so you will be aware of upcoming analysis as soon as it is uploaded and become a Cyber Arabian. Also, you can subscribe to my Twitter and Telegram channel to be notified about major, time-sensitive, emerging news, updates and announcements. And if you think the amount of effort and time that I have spent on this analysis deserves a like, simply hit the like button. It also helps to spread the insight so everyone can invest wiser and more informed, which in turn improves the adoption. Now let's begin the technical analysis. To do our technical analysis on Bitcoin's chart, we will use multiple time frames and we will analyze different aspects. First, we will try to check if there is a trend and find the direction. Then we analyze volatility and trend momentum. After that, we try to discover patterns. And at last, we analyze volume. Step 1 is trend direction. To analyze the trend direction, first we check the structure. And here we can see a high, a low, a higher high, a higher low, and a high which is at least the same as the previous one. So the structure tells us we have an upward trend. Next we analyze moving averages and they are expanding toward up, so we have an upward trend which is getting stronger. Also the exponential moving average ribbon, which has acted as support multiple times, is expanding upward and price has almost touched it recently, which is reassuring for the trend. To analyze the volatility, first we check the Bollinger Bands. Price is a lot higher than the midline, but lower than the upper band. Historically, on monthly time frame, we used to see 7 to 8 close over the upper band before a correction. Also, after a long period of contraction, we are at the beginning of an expansion. Using the Keltner channel, we see that price has bounced upward on the midline recently, meaning the trend has not changed. And looks like it is going to create a close over the upper band, which means the trend is strong. We can see what happened after closing the price over the upper band the last 2 times. To analyze the momentum, we check the RSI. And as you can see, historically the overbought area for monthly chart is higher than 80% and usually 95%. We are currently at 72 approximately and have a long way to that point, despite a big green candle in the upward trend. Now let's find some patterns if possible. Beginning with a static support and resistance, there we have the trend line. And right now price is playing with the all-time high, but this candle will be closed 12 days from now. And moving averages, which can act as a support, are far from the price. Too much distance from moving averages usually leads to correction. So if you use previous top for comparison, it's possible it may give a price target around 80,000. Or 78, a little less or more, before we see a sideways price action. The other support and resistance we can find is by using volume profile to find clusters of trading activity. And we can see we have one here at 33, one here at almost 47 and one here at approximately 57. During the Fibonacci retracement, we can see price has respected the lines multiple times, and interestingly this level of 78% is in confluence with this level from volume profile, so we can give more weight to this level. Also now we have another price target which will be 161%, so we can set another target here. Checking the Elliott waves, looks like that we are in the 5th wave of impulse. Checking the candlesticks, we can see these two candles are forming an engulfing pattern, which means the body of the second candle is covering the whole body of the first one. And also this candle alone is creating a bell-toed pattern, meaning the opening price is really close to the low price. Let us keep in mind that this candle needs almost 12 days to close. Up to here almost everything looks good. But the volume, looking into volume, we can see the increase in the volume confirms the previous uptrend. But the volume didn't confirm the downtrend, and probably we should wait to see some more candles to be formed to have more data to see if the volume confirms the current trend or not. Now let's analyze the weekly time frame with the same approach. Step 1 is trend direction, and the upward trend direction has the same structure here. And price is higher than all moving averages. Step 2 is volatility. Checking the Bollinger Bands after periods of expansion, contraction. It was expanding, then contracting, but right now it's expanding again. So it is not too much reliable, but overall situation is good. Looking into the Keltner channel, we see price has bounced over the midline, creating a close over the upper band, which looks very bullish. Step 3, momentum. RSI on weekly time frame. Historically, weekly RSI showed us the overbought area is higher than 80%. So from the 68% to 80%, we have a lot of space for price increase. And the other interesting fact is that a bullish rejection has been created here. We can see the price has plunged down the 50% level, came up, retested the level, and created a higher high. Aside from this, the structure here is very similar to a structure here in 2012 to 2013, where RSI moved from the oversold area to overbought area with 3 consecutive higher highs, and the same here, then coming down to test the 50 level, then created a local high in 60 to 70 area, and then a straight to overbought area. Maybe it happens here too, but if it happens, we may see something like this here. We are almost here or here, so we may be at a situation like this. Step 4 is patterns. One addition here to the monthly support and resistance is bugs between 42 to 40,000, which has been tested multiple times, and also this 52,000 level. Also, moving averages can act as a support like here and here, so if the price drops down we can have an eye these levels too. And this broken triangle can give us a price target interestingly exactly at the Fibonacci level at 86,000. The other pattern that is possible is something like this cup and handle, which can give us a price target around here, 76. We previously saw that the 76 to 80 was a price target, so yet another one close to this one adds to its value. Another interesting pattern that we may be able to see here is this channel. You can see we have broken through and tested this upper line. Volume doesn't confirm this move, but we are on the weekly time frames, so a close over that upper line can be used as confirmation. And Elliott waves looks the same. We can see an engulfing pattern here and a tree advancing soldiers here. And interestingly, each body is bigger than the previous one. So it looks like they are completely ready to attack the upper line. Step 5 is volume. Volume is not confirming the uptrend. While price was going up, the volume was going down. And while price was going down, the volume was going up. And right now it's almost stagnant while the price is going up. So it is not exactly confirming this uptrend on weekly time frame. But the first time recording this video, I found out the pattern that volume is forming from May 2021 is a lot similar to the pattern that volume forms in March 2020. So I examined that a little more and some very surprising result was uncovered for me. It looks like after a volume spike and a gradual decrease in volume bars, we see a parabolic move. The first volume spike is happening on a very big bearish candle, usually following some other candles of the same type. Well, they say buy when there is blood in the streets, even if it is your own blood. It's what smart money does. But of course, it's psychologically hard and harder to know how much blood exactly should be there. So here is a rule. There should be a spike in volume on a big decreasing candle. Also, moving average for volume should be decreasing or stagnant. Also, volume bars should not be increasing gradually before the spike, and the spike should not be in second phase of the pattern. Then we can see volume gradually decreases in the first phase and gradually increases in the second phase, where price goes parabolic. Now let's examine the whole life of the project to see what we can find. Here the moving average for volume is going up, and now down, and ignoring this spike, we can say this one is the spike we're looking for on a big descending candle after a decrease in the volume average. So this is the first time we saw the pattern, and after that we have a gradual decrease in volume. Then volume goes up gradually on a parabolic move. Let's mark this move. This is a similar spike, but as you can see, the other volume bars are increasing gradually, and it is in the second phase of the pattern. Here, the moving average is stagnant after this increase, now stagnant, and volume is not gradually increasing, and we have a small spike here. So yeah, a parabolic move, and decreasing in volume bars and increasing in the second phase. Decrease in volume bars, but no spike. Now gradually going up, moving average coming down, but no spike yet. Decrease and a spike. So yes, another parabolic move. Very interesting. This is almost a spike, but we have gradual increase before that. Decrease in the volume and a spike. And gradual decrease after that. And another parabolic move. It's another spike, but it's in the second phase of the pattern. Yes, another spike here after a decrease. And yes, the price goes parabolic again. This is another spike after stagnancy. And we are here. Okay, now we can see the big picture. And if we find halvings, we may find more interesting results. Looks like we have 3 pairs of this pattern, 1 pair for each cycle. And interestingly, I understood that the lifespan of the second, we can say, wave is around 64% of the first one for these 2 pairs. So maybe we have only passed 55% of the second parabolic move. I'm currently working with numbers to see if there is an acceptable ratio for gains. So make sure to subscribe to the channels to be notified if I find anything. Now let's continue our conversation in comment section.